Hello, my name is Elena Gordon, broker of record with Remax Gordon Group Realty, and we're going to talk about the stats today from Toronto Real Estate Board for June this year. And we will start from economic indicators. And as you can see, real GDP growth is up, it's 1.7%. Toronto employment growth is up, it's 1.4%. Toronto unemployment rate is up too, it's 7.9%. Inflation in May this year was 2.9%, it's up. Bank of Canada overnight rate in July this year was 7.8%. In reality, it was 4.75%. Prime rate in most Canadian banks was 7%. It's down by 0.25%. In reality, it's 6.95. Next, total residential transaction. We sold 16.4% less June this year to compare to the last June. And it shows that our inventory getting bigger and we have a well-supplied market. Seasonally adjustment, we sold in June this year compared to May this year. We sold 4.2% more, and it's probably because of the rate cut on June 5th, and it was the first cut for the last 2 years, and it gave some confidence for people and they start to buy more. So we sold 4.2% more for 1 month. It's a good increase. And next we go to average selling price. Average selling price is down by 1.6%, but considering that we sold 16.2% less compared to the last year and we have just dropped for 1.6%, it's not so bad. Seasonally adjustments, we don't have much change, it's just 0.4% change increase in June 2024 compared to May 2000. Next one, we have new listings. In June this year, we have 12.3% more homes entered to the market to compare to June last year, and plus we had lots of inventory from the previous months. This shows again that we have a well-supplied market and that the price drop was just 1.6%. That's not so bad. If we look on the sales to new listing ratio, we can see that it's down by 11% and now we are 35% to compare to June last year. And 35% we are in a buyer's market. 240 it's a buyer's market, 40 to 60 it's a balance market, and 60 and plus it's seller's market. Next we have a days on the market, and as you saw we have a more inventory, buyers have a more choices. That's why the day on the markets it's up by 50%, right? And that's not surprising. Now my favorite slide, sales and average price by the major home types. And as you can see, in 416 area we have a less drop in the price compared to 905 area. For detached homes in 416 area, it's minus 1.6%. For townhouses, it's minus 2.7%. And condo apartments, 0.9% drop. You see the number for semi-detached, the price drop by 8.9% and significantly more than for another types of the properties. I think it's because semi-detached houses, it's mostly old construction, because now builders, they don't build this way, they save on the land, and because the semi-detached in Toronto, they're usually like 30, 40, 50 or more years old. So they require substantial renovation, and that means people have to put money in the house, and we have a kind of problem with affordability and people trying to put more money in down payment to be approved for a better house for bigger price, and maybe don't have their mortgage too big. And now look in the 905 area. For detached houses, we have minus 4.2% drop. For townhouse, we have 5.6% drop in the price. In condo apartments, we have a 2.6% drop. It's much bigger than in 416 area. I think 416 area performing better because we have a lot of immigrants coming and most of the work is in Toronto. Plus people moving back to Toronto because they ask to go back to the offices and there is more jobs in Toronto. It's kind of more opportunities for job in Toronto than in 905 area. But if you look on the semi-detached houses in 905 area, you can see that we have a bigger drop than another type of the property. It's minus 7.4%. And again, the reason probably because it's usually older properties. Nowadays, builders don't build this way, and older homes needs more money invested. If we look at the condo apartments, 416 and 905 area, they have a less drop because it's cheaper properties, and cheaper properties we have more people who can buy it. Now, to summarize everything, I can say probably that Canadian economy and housing, they're kind of in stagnation right now. I didn't see any big changes to compare to the last months. We still have a very well supplied market with a very big inventory. And as you saw, we sold 16.2% less, but we got 12.2% more listings that came to the market in June this year. Despite that, the good news that the price dropped just by 1.6%. Yes, for sure, it's combined, and different properties they prefer differently, and different areas they perform differently too. But 1.6% drop to compare to all this increase of inventory in days on the market and everything else, that telling me that Canadian people, they have a lot of equity in their homes and they are not in any rush to sell their home for any money. Yes, for sure, people who sitting on 2 mortgages and they get renewal and everything else, they might affect this number, but most of the Canadians, they're not in a rush to sell their houses. If you're in the market to buy, we have lots of opportunities for you because market is very well supplied. And I think people who is sitting on the sidelines and they're waiting for rates to go down and then make a move. We have a saying, don't marry the rates, marry the home price. That means don't wait for the drop in the rate. Buy cheaper now, and by the time the rate will go down, your payments will be less, but you bought cheaper. That means you own less to the bank. Anyway, it's all the numbers. And if you want to know about your property or you want to buy and you want to see what is your situation, reach me out and we can discuss everything. That's all for today for market stats, and I'll see you next month.